Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here, and we're going to talk about why the Fed can't figure anything out. Let's dive in.
Trade Genius.
So Bob, we had PPI come in on Friday, and the market jumped up after those numbers came out. But what is it really telling us? And what is this stuff that we're hearing about the Fed now talking about not cutting rates?
Yeah, so CPI and PPI both were lower than prior periods, but it was higher than expectations. And basically what it's telling us is that I think we've seen the bottom of inflation for this round. And I have a question for you, Phil. How many PhDs does it take to screw up an economic model?
Well, I know it usually takes 2 or 3 to screw in a light bulb. Economic model, who knows?
2001, one to write the report, and 2000 to give them the bad data. So, that's how many PhDs they have at the Fed. I want that damn job. That's $200,000 a year to actually produce garbage.
Crazy.
It's crazy. So you have a situation here where the reason why I put this chart up, Phil, is, and just forget all the details of it. I couldn't find a cleaner chart, but what it's saying here that really caught people's attention was the spike in food prices. I also got a buy signal in DBA, Phil, which is the food commodity ETF too. This is not what you want when we talked yesterday about unemployment claims ready for takeoff. You don't want poor people that are hungry. Okay, I think the
food on this chart, by the way, is that light blue color, and if you look at from the previous bar, that's quite a bit of a big jump up there.
Yeah, and the thing that's really scary, Phil, is that this report reflected a deflationary impulse on energy the month before. That's gone. That impulse has retraced and then some. So next month, you're going to have higher energy prices. And the other thing that's really weird is rents are still sticky, so they're not coming down. And primarily because the balance sheet of the American people are such that they can't absorb a mortgage and they don't have the down payment. So landlords are feeling no pressure whatsoever to drop rates. So this is not a good situation whatsoever. And healthcare is always going up 10%. No, I don't care what kind of lipstick they throw in that bad boy. You're getting double digits for the next 10 years. So guys, we're bottomed out. That's the reason why on Friday, gold was up and Bitcoin was up. The day before, energy was up. And then copper hit all-time highs. We said yesterday, gold hit all-time highs. People are preparing for this. And no matter who gets elected, whatever their policies are going to be inflationary, at least in the short term.
Yeah, and this is why we're not going to get a bailout of printing sooner rather than later, because I hear that sentiment a lot. Oh, they're not going to stand for the market to pull back. Well, what were we just going to throw away the physics of economics and never have another recession? No, it's not going to happen. And the reason for that is because you have to control inflation. So the Fed, they're going to be hand tied. Now, will they print again, do another round of QE? 100%, like absolutely. That's just the normal way things work now. But they're not going to do it until this gets back down. And again, core PCE, right? You simply look at the core PCE chart and you look at historical rounds of QE, never happens above core PCE over 2%. Never happens. So, and we're not there. We haven't gotten back under it yet. We're up at 2.2, 2.3, something like that. We're coming back down, but you're not going to see that. And I think we will actually get down into that box, Bob. And I wouldn't be surprised if we actually get under 2% core PCE at some point next year. Now, when that happens, now you can come talk to me about another round of QE and another round of printing and these guys trying to jumpstart the economy to get out of the funk that we would be in at that point, right? Then you can do that. But to think that they're just going to keep the party going up at these levels, especially if the market's going to blow off, the Fed's definitely going to be concerned about inflation reigniting at that point too, right? Because asset prices are reinflating. And now you're going to have a nightmare scenario where input costs aren't coming back down because asset prices have inflated, and yet jobs are struggling, right? And jobs should continue to struggle here. Unemployment should continue to grind up. And as we saw, jobless claims would continue to grind up. So it would be total nightmare scenario for the Fed going into Q1 of next year. I personally think that is exactly what's going to happen. And I think that's why we saw them come out yesterday or the day before and say a pause for November is on the table all of a sudden.
Yeah, look, you have to understand the Fed and the banks can only do so much. All they can do is induce you to borrow, right? So they don't put money in your pocket. They just make the money that you borrow from them potentially a little bit more palatable. Look at China. 2 weeks after they announced their stimulus, it's already over. You get to a point of saturation in debt. And so, unless you want to start taking debt away from people, you're not going to fix this problem. So I think whatever they're going to try at some point is just going to fail miserably. And they're looking at China right now and they're like, holy moly, maybe we shouldn't go there just yet. And I think that's another reason, Phil, they may not reduce rates because they got to provide that bank that free money, and provide high net worth people a place to hide out at 4.5% and 5% during a recession. Just remember, if you're a billionaire and you have it all in cash, I think you probably live on $45 million a year, state tax free in California, and ride out a recession. So I think we're going to see, more and more of the defensive positioning and they're not going to be able to stop the inflation because even if they don't stimulate, Phil, just the debt alone is causing us to print more money. So it's just really sad, but not unexpected. And all we can do really now is profit from it because we don't want to be a victim here because you'll never climb out of the hole.
Yeah. All right, guys, let us know your thoughts on today's podcast below. We'd love to hear your comments. As always, if you need help navigating these markets, head over to tradegenius.co and check out our specials over there. We got some great new tools, guys, going to be very helpful in helping navigate not only when this market goes up, but also warnings of when it's going to roll over. Very important for the next few months to have these tools. So head over there and check it out. Thanks, Bob. We'll see you guys on the next video. Take care.
Trade Genius.